Today, the S&P 500 finished higher. The average S&P 500 stock finished lower. Both of those are true, and both come from official index closes. The headline index gained about 0.3%. The equal weight version of the exact same 500 companies lost about 0.05%. Yesterday, those two indexes did the opposite thing. Same companies, opposite answers. 2 sessions in a row. Here is what actually flipped. Start with the numbers. The S&P 500 closed at 7,677.28, up 24.42 points. The Dow added 160.24 points. The Nasdaq Composite added 171.11. So far, an ordinary green day. Now the second index. The S&P 500 equal weight closed at 8,973.67, down 4.64 points. Same 500 companies, one weighted by company size, one weighted evenly. On the same session, one finished up and the other finished down. The rule comes straight from S&P Dow Jones indices. The S&P 500 weights every company by its float-adjusted market value. So the largest companies move it the most. The equal weight version holds the same 500 names, but resets each one to the same weight at its rebalanced date. These are not two markets. They are two questions. Cap weight asks, what happened to a dollar spread by company size? Equal weight asks, what happened to the typical company? Most days, those answers agree. This week, they did not. Here is what changed between the two sessions. Monday, semiconductors were the drag. Tuesday, they were the lift. NVIDIA rose 2.19% the day before its own earnings report. Micron rose 2.48%. The semiconductor fund, SOX, rose 1.56%, and technology rose 0.94%. Underneath that, energy fell 1.66%, staples fell 1.06%, and materials closed exactly unchanged. 6 sector funds up, 4 down, 1 flat. That is a narrow advance. It does not prove why anyone bought. It shows where the weight sat. So what do you actually watch? Not a prediction, measure the gap. Take the cap-weighted change, subtract the equal weight change, and see whether that spread stays this wide through NVIDIA's report on Wednesday. If it stays wide, a small group of companies is still writing the headline. If it closes, the market is broadening back out. For context, fear and greed finished at 59, still inside greed, and the 10-year Treasury yield fell for a second day to 4.639%. Neither of those tells you what happens next. The habit does. Before you read a market-wide conclusion into one index close, go check the other one.